There are two types of capital. One is called positive working capital, another is called negative working capital. Every month they have to maintain how much money? 20,000 is the minimum. At the end of the year, what is the first step to do? Either it will go on a fixed installment method or diminishing balance method. If the current assets are more and current liabilities are less, it is called positive working capital. If the current asset is less and current liabilities are more, it is called negative working capital. Hello, my dear student. Warm welcome to the model question paper about Financial Management 2, 6th semester BCom Part A. We are going to discuss about the model question paper. What I did know, I selected the question from different question papers and have all the units has to be covered. So I divide the entire question paper into two groups, Part A and Part B. Part B we have got 3 or 4 questions. Part B we have got 3 or 4 questions which cover all the syllabus and all the model question paper which have been selected from the different question paper. So definitely it is useful to the student from the examination point of view because it covers all the syllabus and all the question paper which has going to be made in the different question papers. I have selected the question and I get the answer to these. So I am going to explain what are the question I have put, what is the answer to be made. We'll move on to the question now. First question goes to working capital. This first question goes to working capital, 15 marks. First, I will read out the problem. How to do it, I'll tell you. So, estimate working capital. They asked to do estimate working capital. Raw material per unit is 140, labor is 60, overhead is 100, total cost is 300, profit, add the profit 100, selling price is 400, raw material in stock an average of 2 months, material in process for 1 month, finished goods in stock for 2 months, credit allowed by creditor is 2 months, credit allowed to customer means debtor is 1 month, lag in payment of wages means outstanding 1 month, lag in payment overhead 1 month, 1/4 output is for cash sale, production is 1,04,000 units, cash in hand is 80,000, safety margin is 10%. Here, your total production is 1,04,000. First, you'll go with the simple question. Total production 1,04,000 minus 1/4 is the cash. 1/4 is the cash sale. So 1/4 of 1,04,000, 104 followed by 30 into 1 divided by 4. 26,000 deduct 78,000. This is the credit sale. This is the first point. So what is the total production? 1,04,000. 1/4 is a cash sale. 26,000 has gone. The balance is 78,000. This is for debtors. Debtor you have to calculate only for 78,000 units. So what is working capital? What is working capital? Current asset minus current liabilities are working capital. So if the current assets are more, if the current liabilities, it is called positive working capital. If the current asset is less than the current liability, the negative figures are negative working capital. There are two types of capital. One is called positive working capital, another is called negative working capital. If the current assets are more and current liabilities are less, it is called positive working capital. If the current asset is less and current liabilities are more, it is called negative working capital. So we are going to discuss which are the current assets are. Common and current. What are the current assets are? Cash in hand, cash at bank, stock of raw material, stock of finished goods, work in progress, prepaid expenses. What are the current liabilities? Creditor for purchases, lag in payment of wages, lag in payment of overhead expenses, provision for taxation still not paid. All the we have got outstanding provision. Whatever you have to pay outstanding, that will come current liability. Current asset minus current liability is called working capital. For that, add 10% margin, 15% margin. When you make the total become net working capital. That's the procedure. We will move on to problem now. Slowly we can move on to problem. What is the first one? Raw materials in stock an average of 2 months. So what's your production? 1,04,000 raw materials. What's your total production? 1,04,000 for 12 months. It's going to stay for how many months? 2 months. What is the cost of the material? 140. So 1,04,000 divided by 12, it is going to stay for 2 months at a cost of 140. 104 followed by 30 divided by 12 into 2 into 140. So 24 lakh 242 666 6667. So 24 lakh 26,667. 24 lakh 26,000. 24 lakh 26,667. We'll go once again. 104 1,04,000. 14 followed by 30 divided by 12 into 2 into 140. So 24 lakh 26,667. 24 lakh 26,667. This goes in favor of raw material. Come back. Material in process. Materials in process. Materials 100%. So how many months? Material 1 month. 1,04,000 divided by 12 into 1 into 140. So half of this 1,04,000 104 followed by 30 divided by 12 into 2 into 140. 104 followed by 30 divided by 12 into 1 into 140. 1 So 12 lakh 13,333. Labor 50%. 1,04,000 divided by 12 into 1 month. What's the labor cost? You see that? Labor 60 into 60 into half, 50%. Means 30 rupees. So 1,04,000 divided by 12 into 1 into 60 divided by 1 divided by 2. You go 1,04,000 divided by 12 into 1 into 30, half of that. So 25, 2,59,999. 2,59,999. Say 2,60,000. Overhead 50%. You have to take material 100%, labor 50%, overhead 50%. 1,04,000 divided by 12 into 1 into overhead 100 into half. 1,04,104 divided by 12 into 1 into 50. 4 lakh 33 4,33,333. This is your overhead. 4,33,000. So it is 12,13,333. 12,13,333 plus 2,59,999. 2,59,999 plus 4,33,333. 4,33,333. It will come 19,06,665. So 19,06,665. This is the raw material. So work in progress here. Then regarding the debtors on cost price. See the data. We calculate the raw materials for 2 months. We calculate material process for, this is for 1 month. 1 month, material 100%, labor 50%, overhead 50%. So debtor on cost price. Here it is allowed debtor to allocate 1 month on the material. So debtor 78,000 divided by 12 into 1 month into cost price. Your cost price is, what's your total cost? 300. 78,000 is a credit sale divided by 12, 1 month credit. For per month he has to pay how much? 300 rupees. So 78,000 divided by 12 into 300. So 19,50,000. 19,50,000. Then creditors for purchases of materials. How many months creditors? See that credit allowed by creditor is how much? 2 months on the materials. Cost is 140. So 1,04,000 divided by 12 into 2 into 140. I think you have done same thing. 12 into 24 lakh, 26,000, 24 lakh, 26,667. Recheck up. This is 667. 1,04,000 divided by 12 into 2 into 140. So 24 lakh, 26,667. So that goes. So we collected. So this is raw material over, finished goods in stock for 2 months. Finished goods in stock for 2 months. So 1,04,000 divided by 12 into 2 months, so into cost price. 300. So 1,04,000. Finished goods 104 divided by 12 into 2 into 300. 51 lakh 99,991. So 52 lakh. 51 lakh 99,998. 5 lakh 19,000. 51 lakh 19,999.9, 52 lakh. We'll repeat once again. 104 followed by 30 divided by 12 into 2 into 300. It will come 51 lakh 99,999, say 52,000. So cash in hand 80,000, lag in payment of overhead 1 month. Then lag in payment of wages 1 month outstanding. We can do it there. Lag in payment of wages 1 month. So 1,04,000 divided by 12 into 1 into labor cost 60 lakh outstanding. It is 104 followed by 30 divided by 12 into 60. 5 lakh 19,999. 5 lakh 20,000. Lag in payment of overhead. Lag in payment of overhead. Lag in payment of wages 1 month. Lag in payment of overhead 1 month. 1,04,000 divided by 12 into 1 into overhead 100. 1,04,000 104 followed by 30 divided by 12 into 100. 8,66,667. 8,66,667. 8,66,667 divided by 12 into 1 into 100. Is it 100? 100 rupees. Don't take that. Profit should not be considered. So go with the problem now. What's the value? Find out. Raw material 24,26,667. 24,26,667 as per the working note. Work in progress material 12,13,333. 12,13,333 as per the working note. So raw material 24,26,667 raw materials, work in progress full 100%. This is labor 50%. Then come back to labor. 2,59,000 material 12,13,000. 12,13,333 labor 2,59,999. 2,59,999. Almost 2,60,000 overhead 4,33,333. 4,33,333. Put the flower bracket. The total will come. If you add no, 19 lakh 6,665. 19 lakh 6,665. This all the three goes. Then finished goods. Finished goods. Come back to finished goods. Finished for 2 months. 52 lakh. 52 lakh. Then debtor. Debtor 19 lakh 50,000. As per working notes, all from the working note, 19 lakh 50,000. There is no prepaid expenses, nil. So cash in hand, 80,000. Cash in hand, 80,000. Then total current assets. So we'll go with one by one. 52 lakh, 52 followed by 50, 1, 2, 3, 4, 5, 52 followed, plus 19 lakh, 1950 followed by 30, plus 80,000, then 24 lakh, 26,667 plus 1906,665. So total current assets will come 115,115,63, 115,63,332. 1 crore 15 lakh 63,332. 1 crore 15 lakh 63,332. Come back to creditor for purchases. Creditor for purchase. Creditor for purchases 24 lakh 26,667. 24 lakh 26,667. Then lag in payment of wages, working note, lag in payment of wages, 5,20,000. Then lag in payment of overhead, 4,33,333. 4,33,333. Add the figure. Total current liabilities 24 lakh 26,667. 24 lakh 26,667 plus 5 lakh 520 followed by 30 plus 4 lakh 33,333. 4,33,333. 33 lakh 80,000. 33 lakh 80,000. So 33 lakh 80,000. It is 115,63,332 minus 80,000. 81 lakh 83,332. 81 lakh 83,332. Add contingency. What's the percentage? Contingency percentage. Safety margin 10%. 10%. on working capital. So 81 lakh 83,332 into 10 divided by 100. 818 333 minus 81 lakh 83,332 81 lakh 83 minus 818,333 is equal to net working capital 73 lakh 64,999. Say 73 lakh 65,000. 73 lakh 65,000. Slowly. So first we'll go one by one. Raw material in stock. Everything we have done. This done. Everything is done. Safety mark. So raw material 1 lakh is 24 lakh 26,667. Material in process 100%. This is 12 lakh 13,333. Check up once again. 12 lakh 13,333. This is 104 followed by 30 divided by 12 into 140. 12 lakh 13,333. So 50% it will come 19 lakh 50,000. Debtor 78,000 divided by 12 into 300. 1950 19 lakh 50,000. So check up everything is correct here. So 24 lakh 667. This is 19 lakh 6,665. This is finished goods is 52 lakh. Finished goods 1 lakh 4,000 divided by 12 into 300. Check up this heavy amount. 1 lakh 4,000 divided by 12 into 2 into 300. 51 lakh 99,999. So say 52 lakh. So everything is correct. So totally it will come finished goods 1 crore 15 lakh 63,332. If you add all these things, no, it will come 33 lakh 80. Deduct no 81 lakh 83,332. Here deduct no 73 lakh 64. Say 73 lakh 65,000. Hope you have followed that. This way they will ask. So this is the first working capital. First unit goes. Then we'll move on to, this is very important, cash budget. Very good question. This question has been taken from the CA paper also. This is taken from the question paper of the different paper. Is a very, and asked to pay April to September. April, May, June, July, August, September. So sales is given. Month is here again. January, February, March is given. Then slowly we can go. Wages and salary, April, May. After sale, see the word, after sale, 80% on credit, 21%, 75% of credit sales are collected with 1 month and the balance in 2 months, they say. Then, purchase amount, 80% of sales and are made and paid for in the preceding the sale. So next month sale, 80% is the purchase. So that will be paid in the next month. So March in 1 month. Here no, purchases amount 80% sales and are made and paid for in the month preceding the sale. So next month sale become the purchases that will paid in the next month. That will be paid in the next month. Firm has 10% debenture of 1,20,000. Interest on this has to be quarterly in January and April. The firm has to make an advance payment of tax fees 5,000 in July. The firm had a cash balance of 20,000 in April, which is the minimum desired level of cash balance. Any cash above below this level is made up temporary investment or liquidation of temporary investment or temporary borrowing. So every month they have to maintain how much money? 20,000 is the minimum. So we'll go with the working note regarding the sale. Here the sales are, we go 1 lakh, 1,20,000, 1,50,000, 80,000. Here I'll show you. Slowly I'll show you. Collection from debtor, sales are 1 lakh, 1,20,000, 1,40,000, 80,000, 60,000, 80,000, 1 lakh, 80,000, 60,000. When you say sales, it includes the cash sale as well as the credit sale. It includes cash sale as well as the credit sale. Here, 20% is the cash sale. So 20% of this is 20,000. 20% of 1,20,000 is 24,000. 20% of 1,40,000 is 28,000. 20% becomes 16,000. 20% becomes 12,000. 20% becomes 16,000. 20% becomes 20,000. 20% becomes 16,000. 20% becomes 12,000. 20 becomes. So this is the credit sale. All are credit sale. So what the problem say? 75% will be collected in the next month. So January, 75% of 80 is 60,000. 75% of 96 is 72,000. 75% of 1,12,000 is 84,000. It will go like this. Then another 25% will be collected in next month. Total how much should be collected? 80,000. 60,000 here. 20,000 here. Then regarding the 96,000, 72,000 here, another 24,000 here. Regarding 1,24,000, 84,000 here, 28,000 here. So 84,000 plus 28 is 1,12,000. Come back, 64,000. 80% means 48,000 here, 16,000 here. It will go like this. So it will go 60, 20, 72, 24, 84, 28, 48. Then on 48,000, 75% is 36,000, another 12,000. Here, 48,000 rupees. Now you have got 16,000, 40 here, 80,000, 48,000. For 64,000, another 16,000. 64,000, 48,000, 16,000, 80, 60,000. 20,000, 64,000, 48,000, 16,000. It will go. If you add this, because we want April, 1,08,000, May, April to October, these are all the total credits collection. Collection from debtor, 1,08,000, 76,000, 52,000, 60,000, 76,000, 68, 52,000. This is a collection from debtor. So 75% January to February balance in the next month. So January, February 75%, another 25% in the next month. So here 75%, 25%, 75%, 25%, 75%, it will go like this. So we have collected from the debtor. This is the first step. This is your inflow. Regarding these purchases, purchase amount, 80% of sales are made and paid for in the month preceding the sale. So next month sale, 80% you have to make here. So particular, you have got January, February, you have got, it will go like this. You have got April, so May, you got February, 80% of this will come in January. 80% of February, next month sale, previous year purchases. How much you have got? 1,20,000. So 80% of this, here now, creditors paid. So 80% of next month. So February sale, you got 1,20,000, 80% of that, 1,20,000, 120, followed by 30, into 80 by 100, 96,000, that goes to January. Then March in February. March sale, see that? What's a March sale? See that? March sale is 1,40,000, 140, followed by 30 into 80 divided by 100. So 1,12,000. So it will go to next month. March, no. February. How much will come? So 1,40,000, it become 1,12,000. Then look after the April. What's your April sale? 80,000. So 80% means 64,000 to March. Then May, you got 60,000. 80% means 48,000. Then June, 80,000. 80% means 64,000. July, you got 1 lakh, 80% means 80,000. August, 80,000, 80% means 64,000. September, you got 60,000, 80% means 48,000. You got October sale 1 lakh, 80% means 80,000. But you are doing up to what now? April to September. So next month sale, previous month purchase. 96,000, 1,12,000. How they have been paid? See that. We want, you are going to make calculation from April to September. So March in April, April in May. How they have been paid? March in April, April in May, May in June. See that how they have been paid? Purchase amount 80% are made and paid for in the month preceding the sale. Next month will be preceding the sale. So how they have been paid? January and February, March. So creditors paid 1 month. So here 64,000, 48,000, 1 month, 48,000, 64,000, 80,000, 64,000, 48,000, 80,000. It will go like this. But we are doing April too. So March in April, April in May, May in June, June in July, July in August, August in September. So September in October. We want for which month? April to March. Okay, we'll start now. So particular. April to September, that's only opening balance. Opening balance, we start with the opening balance. Minimum balance 20,000. Add cash inflows. Number 1, cash sales 20%. April, see that? Cash sale, April, 16,000. May, April, 16,000. 12,000, 16,000. 12,000, 16,000. So this is 20% of the cash sale. 16,000, 12,000, 16,000. You see the July, June, June 16, July 20,000, 16,000, 12,000, 20,000, 16,000, 12,000. This is your cash sale. Then collection from debtors. Collection from debtors Working note, collection from debtor, April 1,08,000, May 76,000, 1,08,000 in April, 76,000 in May. This is collection from debtor as per 1,08,000, 76,000. This over, May over, June 52,000, July 60,000, 52,000, 60,000. So, July over, August, September, 76,000, 68,000, 76,000, 68,000. Then, these are collection from debtor. Any inflow, see that any inflow is there? No, this is your outflow. Sales, inflow, outflow, purchase or paid outflow. For my 10% division, this is outflow, this is also outflow. Add the figure. So 1,08,000, 108, followed by 30, plus 16,000, plus 20,000. So 1,44,000. Total cash inflow, then minus outflow, creditors, paid, creditors paid. See that how the creditor has been paid here. Creditor paid 64,000 April, 48 in May, 64,000, 48,000 in May, then 64,000, 80,000, 64, 40, 64, 80, 64, 48,000. So creditors paid then. So here, how we calculate it? 96,000 paid in February, February in March, March in April, April in May, May in June, June in July. 64,000. We will go like one by one. Then firm has to maintain advance tax in July. Firm has a debenture 1,20,000. Debenture paid. Debenture interest. Paid. Debenture interest paid. You can say debenture interest. What's the debenture value? 1,20,000 into 10 by 100. It is 12,000. Paid quarterly, once in 3 months, 3,000. So, every 3 months they are going to pay. Once in which month they are going to pay? Has to be one in January, April. April once we pay 3,000. 3,000 in April. So this goes April, May, June, July he is paying to pay another 3,000. It will cover July, August, September. This cover April, May, June. This cover July, August, September. Then tax paid. Tax paid. How much tax paid? See that? 5,000 in July. 5,000 in July. So minimum balance to be maintained is 20,000. Careful. Minimum balance to be maintained is 20,000. So 64,000, 3,000. Minimum balance should be 20,000. Issuing 20,000. So your inflow is 1,44,000. 1,44 followed by 30 minus 64,000 minus 3,000 minus 20,000. 57,000 is excess is there. Regarding other things are over. Then you got wages and salaries. Wages and salaries. Wages and salaries. Wages and salaries. April wages and salaries. April 9,000. April 9,000. May 9,000. May 8,000, 10,000. 8,000, 10,000. May, June. May, June 8,000, 10,000. July 10,000, 9,000, 9,000. 10,000, 9,000, 9,000. So wages 9,000 rupees. See that minimum balance I have already written. These are all the payment. Once I check up this. April 9,000, 8,000, 10,000, 9,000, 8,000, 10,000, then 9,000, 10,000, 9,000, 9,000. Okay. So here, what's the balance left over? Add this minimum balance I have maintained. 1,44,000 minus 64,000 minus 3,000 minus 20,000 minimum balance, then minus 9,000. So 48,000 to be maintained here. Opening balance is 1,40,000. Minimum balance to be maintained is 20,000. That should be. So 1,44,000, 3,000, 1,44 plus 3,000 plus 20,000 plus 9,000, 1,76,000. How it will be? 1,44, 30 minus 64 minus 3,000 minus 20,000 minus 9,000. So balance is 48,000. So this total 48,000 will come. Surplus will come. This is your surplus. Add this. 64,000. I will explain. 64,000 plus 3,000 plus 20,000 plus 9,000. 64,000 plus 3,000 plus 20,000 plus 9,000. 96,000. 96,000. So 1,04,000, 96,000 is 48,000. Okay. So here minimum balance to maintain is 20,000 comes here. Add the figure. So 20,000 plus 12,000 plus 76,000 equal to 1,08,000. This is 48,000. Minimum balance to maintain is 20,000. So it becomes 48,000. Minimum balance to maintain is 20,000. So 48,000 plus 20,000 plus 8,000 is equal to 76,000. 76,000. Once again, the surplus is, your surplus is 1,08,108 followed by 30 minus 76,000. So 32,000 surplus. 32,000 minimum balance is going to maintain. Next month, minimum balance is 20,000. Add the figure. 20,000 plus 16,000 plus 52,000 is equal to 88,000. Minimum balance to maintain is 20,000. So it is 64,000 plus 20,000 plus 10,000, 94,000. 64 plus 20 is 84 plus 10 is 94,000 required. But you got how much balance? 88,000. You require 94 minus 88,000 minus 6,000. Deficit. This is deficit. This can be overcome with the help of the surplus 48,000. There is a deficit of 6,000. Minimum balance to be maintained is 20,000. Come back to next month. It is 20,000. Add the figure. So 20 plus 20, 40 plus 60 is 1 lakh. Here 80,000, 3,000 plus 88,000. 88 plus 10,000. 98,000 with a minimum balance has shown. Here minimum cash 20,000 has to be maintained. Minimum cash 20,000 has to be maintained. So here 80,000, 88 plus 20,000 plus 10,000. I'll repeat. 85, 88, 1,08,108. 80,000 plus 20 is 1 lakh plus 8,000. 1,08,000 plus 10,000. 1,18,000. This we require, but how much you got? Only 1 lakh. How much deficit? 18,000. Deficit. Then come back to next month. 20,000. Add the figure. 20,000 plus 16,000 plus 76,000. 1,12,000. 1,12,000. 64,000. Minimum balance is 20,000. 64 plus 20,000 plus 9,000. 93,000. Here minimum balance 1,12,000, 93,000. 1,12,000 minus 93,000. So 19,000 surplus. Then come back to last month. 20,000. I will explain. So 48 plus 20, 70, 80 plus 20 is 1 lakh. 68 plus 20, 70 plus 10, 80 plus 20 is 1 lakh. 48,000. Minimum balance is 20,000. 68,000. Then 68 plus 90. 48 plus 68 plus 9. 68,000 plus 9,000. 77,000 requirement. So what's your balance? You got 1 lakh, but you have got 77,000 minus 1 lakh. How much excess? 23,000 surplus. So what they say in your question paper now, your question paper says the minimum balance to be maintained is 20,000. That has to be maintained. Minimum balance to be maintained. So I have maintained minimum balance here. See that here I maintain your inflow from the March to April. Here minimum balance is 20,000. I have maintained. So 40,000 is surplus. Next we'll go 20,000. I have maintained the 20,000. So there is a surplus of 32,000. Minimum balance I maintained his minimum 20,000. Add 88,000 is required, but outflow required is 94,000. There's a deficit of 6,000 because you have to maintain 20,000. Then come back to next 1 lakh. Outflow is 1 lakh. 18,000 is the deficit. Come back to next month 20. 1 lakh 12,000. Outflow is 93. Surplus is 93,000. Next month you have got 1 lakh. Outflow is 77,000. Your surplus is there. This is surplus. This is surplus. See that all the outflows are taken. Okay. So here advance time only 4,000. Firm has 10% debenture. So quarterly 12,000 once in 3 months I paid. I paid a 3,000 in April, 3,000 in July. So outflow another 3,000 next month. So this type you have to do. Minimum balance to be maintained, each should be 20,000. You must be made well. So whatever the deficit that can be overcome by 48,000, here deficit also we can come. So total deficit is 24,000, we can overcome. Others are surplus you got. So we'll go to next problem. This goes in favor of cash budget. Next we'll go. This is your lease method. ABC company acquired an asset worth of rupees 10 lakh, for which it has got two options. It can acquire the asset by taking a bank loan of 15% per annum, repayable in 5 equal installment of 2 lakh each plus interest. Every year they have to pay 2 lakh plus interest, 2 lakh plus interest they have to pay, 5 equal installment. Yearly installment, so 3 lakh 20 in the asset. Yearly rental value is 3 lakh 24,000 for 5 years. In both the cases, the installment are payable at the end of the year. It provides depreciation 15% on written down value, diminishing value. The company is in 30% tax bracket, means a discount cash inflow 16%. The discount factor is so much they have given. So they want a question, either you can go on a lease or go on a purchase. First step to follow is depreciation. We calculate the depreciation. 10 lakh, 15%, 1 lakh 50,000. Balance is 8 lakh 50,000. On 8 lakh 50,000, 15% is 1 lakh 27,500. Out of 8 lakh 50,000, 1 lakh 27,500 gone, means the balance is 7 lakh 22,500. On 7 lakh 22,500, 15% is 1 lakh 8,375. From this figure, if you didn't know, it will come 6 lakh 14,125. Your balance is 6 lakh 14,125. 15% is 92,119. The balance is 5 lakh 22,006. On 5 lakh 22,006, 15% is 78,301. The balance is 4 lakh 43,705. So this is the balance at the end of the year. 8 lakh 50, 1 lakh 7 lakh 22,500, 6 lakh 14,125. This is the balance you got. So at the end of the year, what is the first step to do? Either it will go on a fixed installment method or diminishing balance method. It will go in the diminishing balance method. Now, after this, no, we'll go cash outflow, calculation cash outflow. What's the loan amount you have got? 10 lakh. See that? What's the loan amount you have taken? 10 lakh rupees for that. What's the rate of interest? 15%. 15% on this is 1,50,000. Every year, how much he pays? 2 lakh plus interest. 2 lakh plus interest. So what's your interest? 1,50,000. 2 lakh plus 1,50,000. It becomes 3,50,000. Next year, out of 10 lakh, you deduct this 2 lakh. It becomes how much? 8 lakh. On 8 lakh, 15% is 1,20,000. So every year, how much he pays? 2 lakh. 2 lakh plus 1,20,000. How much he's going to pay? 3,20,000 installment money cash outflow. Out of 8 lakh, how much will go? 2 lakh. What's the balance left over? 6 lakh. On 6 lakh, 15% is 90,000. 2 lakh plus 90,000 is 2 lakh. 90,000 is going to pay. What's the real principal money? 2 lakh. On 6 lakh, 2 lakh gone. Balance is how much? 4 lakh. On the 4 lakh, 15%, 60,000. Then add this, it becomes 2,60,000 is going to pay. For 4 lakh rupees, he paid how much money? 2 lakh. What's the balance? Another 2 lakh. On 2 lakh, 15% is 30,000. Every year he has to pay how much? 2 lakh. 2 lakh plus 30,000 become 2,30,000. This is payment outflow. So here, every year, this remain constant. This is your cash outflow. You are going to pay so much money for this 10 lakh rupees. Once you find out, no, then you have got a tax exemption on interest and depreciation. That is your cash inflow. Calculation of cash inflow. Yeah. What's the first year division? 1,50,000 plus your interest is 1,50,000. The total is 3 lakh rupees. On that, tax is 30%. Your inflow, we can save to the extent of how much money? 90,000 in the first year. That is inflow. Second year, 1,27,500 is your depreciation, 1,20,000 interest. Totally, we have got 2,47,500. On that, 30% is 74,250 we can save. Then in the third year, you got 1,08,375 is the depreciation, 90,000 is the interest. It becomes 1,98,375. On that, 30% is 59,513. In the fourth year, you got depreciation is 92,119 and interest is 60,000. If you add both, no, it becomes 1,52,119. On that, 30% is 45,636. In the fourth year, you got 78,301. Interest is 30,000. It becomes 1,08,301. On that, 30% is 32,490. This is your inflow. You can save on interest. You can save on depreciation. So now, when you're going to pay back, in the next step will go, what's your cash outflow? You have got 3 lakh. Your cash outflow is 3,50,000. This is actually cash outflow is 3,50,000. But what's your cash inflow? First year is 90,000. Deduct. Balance in real cash flow is 2,60,000. Your PV factor, as per the problem, see that? Your PV factor 0.862. If you have got 1 rupee, it has value how much money? 0.62. Multiplied this, you'll get the value. 2,24,120 is the real cash outflow. Then come back to second year. Your cash outflow is 3,20,000. 74,000 is 250. Deduct here 3,24,000. If you deduct this, no cash inflow, you'll get the figure of 2,45,750. 1 rupee is valuing 74 paisa. Now it will come 1,85,592. Come back to third year. You got 2,90,000. Your cash inflow after means interest and tax 30% is 59,513. From this figure, if we deduct now, your amount will come 2,30,487. That day, your cash inflow is 0.641. It will work out 1,47,742. Then come back to fourth year. Your cash outflow is 2,60,000. Your cash inflow is 45,636. Your net cash flow is 2,14,364 multiplied by PV factor 0.552. Your net cash flow is 1,18,329. In the last year, your cash outflow is 2,30,000. Out of that, cash inflow means the 30% exemption on interest and tax is 32,490. The amount is 1,97,510. So on that, cash inflow is 0.476. It is 94,005. If we add all these things, the total sigma PV present value is 7,66,798. This is the purchase option. Cash outflow under purchase option. Now we'll go with the rental value lease option. Under lease option, every year how much rental you are paying? 3,24,000. 30% tax on this exemption is 97,200. The net amount is 2,26,800 multiplied by discount factor is 0.862. It comes 1,95,502. Then 3,24,097 deduct. It is common. Every year no. 0.73 it will come 1,68,512. 2,20,641. 1,45,379. 2,26,800. 0.552. 1,25,194. 2,26,800 it will come. So as per the lease option, it will come 7,42,544. If you see no, in your purchase option, it is 7,66,798. As per lease option, it is 7,42,544. Lease option is less than purchase option. As per PV, cash under lease option is options are lesser than PV of cash outflow under buying option. It is advisable to take the asset on lease because this is less, this is more. Better to go on lease method because your lease option is less than purchase option. Better to go with lease option. You must be very, very careful. You have to work out. That's all. This remain constant here now. Every year you are going to pay 2 lakh. But some of the problem says which includes the interest means then you have to deduct the interest here. Here every year 2 lakh plus interest, 2 lakh plus interest, 2 lakh plus interest. So first steps to do is depreciation. Next step to do is cash outflow. Next step to do is cash inflow. Net cash inflow multiplied by discount factor, go with the rental value. So which are the methods to follow? First, you have to go with the depreciation. Next, you have to go with the cash outflow. Next, you have to go to the next cash inflow, that is interest and depreciation at percentage of tax. Next, fourth step is net cash flow to go. Last step is rental value, lease option you have to do. So 5 steps to do. See that? You got lease, no? We are doing the lease option here. L-E-A-S-E. How many have got? L-E-A-S-E. Lease. So how many here? 5 words are there. So 5 steps to follow. L-E-A-S-E. Lease. So how many here now? 5 words are there. 5 steps. Which are the first step is depreciation, calculation of cash outflow. Third step is calculation of cash inflow. Fourth step, net cash outflow. Last is rental value. So that the 5 options to be taken into consideration. Then only we can work out this. But a little bit lengthy, but it's a very, very good problem. Hope you understand. So we have solved the model paper. 1 on working capital, 1 cash budget we have done. 1 we have already done lease method, lease or buying purchase. So almost every chapter is going to cover here, no major. Then in the next session, we'll go to EOQ, economic working capital, ABC analysis there, and credit policy. Only 3 left over. So almost every portion, only 6 portion they are going to cover. Other 3 are the only theory is concerned. I am doing with the practical problems now. 6 questions they are going to ask. 1 on working capital, 1 on cash budget, 1 on leasing method. Next, we got with the credit policy. Then we have got ABC analysis. Then we have got economic order quantity. So we will go one by one now. In the next now, we'll have one by one. We can have it now in the next session. Till then, Goodbye. Meet in the next class with another session about the problems of model question paper B. Till then, goodbye. Meet in the next class.